Hi, in this session we're going to look at how you complete the bank accounts section, which is work paper A in our annual accounts workbook. To be able to do this, you would already have completed your review of the ledger and cleaned up any obvious errors that come through that. And basically what's going to happen from this point forward is we're going to work through it account by account, proving the balance, documenting the balance, and making adjustments as we go. In order to do the bank account section, you'll need three things. You will need a copy of the balance sheet. You will need sources of bank statements and other bits of information that might be useful. Hopefully you've already gathered those from the client. And you will also need access to the ledger to check on different bits of information. The other bit of information you might also need is the client's checklist, which we're not going to use in this scenario because we already have most of the information that we need. Okay, so let's start with the balance sheet, and the first thing we're going to do on the for the bank statement section, which we'll go to here on our tab, is we need to fill in a schedule on our workbook that shows us the balances and the accounts as they appear in the ledger. Okay, and we split this up into accounts that are in funds and accounts that are in overdraft or credit cards, and basically this is the debits and this is the credits. Okay, now this particular client, we have them in MYOB for 2012. From April they head into zero, but for now we're going to be working off MYOB reports. So what I've done already as part of my previous step is I've printed to PDF a range of reports that will be useful to us, including here the balance sheet. So the first thing I'm going to do is simply catalog our bank statement accounts. Now if you already have a workbook from the previous year, this might already be done for you, or you might be able to copy and paste this information across. Otherwise we're just going to have to enter it in. Now this client only has one liability account. They actually do have other credit card accounts in their ledger, but they seem to only be used not for recording transactions, and then they get zeroed out. So I would not worry about those right now. Okay, so the first thing we're going to do is write in here their account balances. Their account names, and now we're going to put in the balances. And for now, I'm just going to put in the amounts straight from the balance sheet. .21. Okay, so now what we have is we have a total ledger balance of in funds and a total for overdraft. Now, the next thing we want to actually do is have a look at the bank reconciliation reports, and whether this is coming from MYOB or from Xero, you're going to basically take the same step. Is we want to find the bank reconciliation report, and here it is for the check account, and we're looking for any outstanding transactions. Okay, so here we have, in this case, MYOB says the ledger balance is this number here. As you can see that I've entered that here into the statement balance column. Adds any outstanding checks and takes out any outstanding deposits. If we had numbers here, then I would also be entering those numbers, plus for outstanding checks and minus for, other way around, plus for outstanding deposits and minus for outstanding checks, so that we end up with the ledger balance as per the balance sheet, which in this case is here. Now the way that MYOB do it is they start off with the ledger balance and they come back to the statement balance. And what we ultimately want to do is we want the statement balance over here, and we want to be able to prove that this reconciliation agrees with ultimately the ledger, but in the first instance with the statement balance that the ledger expects. So in this case, because we have no reconciling transactions, which by the way are now quite uncommon, because in New Zealand we don't write a lot of checks anymore, everything's done by internet banking, there might be a few outstanding transactions, usually not checks, it's usually deposits. And for most businesses these are actually not true outstanding deposits, these are actually cash on hand that hasn't yet been banked, and we would actually want to assess those. So for now let's just work with these numbers that we have here. So we're on work paper A, and here we have a check account balance for 1323.96. Once we've catalogued our information, and by the way we'll just go through all these different accounts here and we'll just double check to make sure that there are in fact no reconciling transactions for all of them, and that happens to be the case for all these 4 accounts. I don't have a reconciliation report for the MasterCard. So for all those 4, we're happy that there are no reconciling items. The next step is to actually agree them to the appropriate bank statement. Now, we are required to actually keep a copy of the bank statement on our files, and in this case the client has sent me 4 bank statements, and I've got a PDF copy of them. These are obviously just printouts off as internet banking, so you can't go by the totals at the top here, available funds, available balance, because those are the balances on the day he did this, which was just a few weeks ago. So in this case we're actually looking for the balance at the end of the 31st of March 2012. And in this case I know that was a weekend, so the 30th will be the last banking day. And the thing I note about these statements is they work from the bottom up. So the top of the page is the most recent. That's quite important if we've got more than one transaction on the 30th of March, as this is the case here. And in this case what we're looking for is we're looking to verify that the statement balance of 1323.96 as expected by the bank reconciliation is in fact the statement balance. And in fact, if you've got an annotate tool in your PDF viewer, if you don't, you might want to switch to one that does. Although for some reason mine's not working here. Okay, I'll just a quick circle. What we can often do is just highlight or put a circle around or an arrow around the balances if there's more than one bit of information on the page. So in this case we agree this balance to the bank statement, and whenever we do this we're going to keep a copy on our file, and we are going to give every page a reference. Now we're going to rename this page to be workpaper A1. It's A1 because we're in the section A and it's the first supporting workpaper. Sometimes you've got to check down here with the tabs to find out what the other numbers are, because some of our tabs, so for example the O section already has O1, O2, O3 and O4. So the first supporting page number we might have available to us if we're in the O section will be O5. In this case it's going to be A1 and it's going to be page 1. And then we'll have to remember later on to go and change the file name for this particular file so we know. Okay, in this case we've highlighted or done something to make this balance jump out at us. We'll go to the next page where we've got 6881. 6881 is the expected balance. We're going to say workpaper A1 page 2, and we'll go and do the same thing here with our little circle just to make sure it's obvious. 25222.5, that's the balance we expect over here. A1 bar, whoops, A1 bar 3 and 10916.33. 10916.33. So what we've done here is very simple. We've just simply verified the closing balance of the bank account as the ledger is expecting it with the bank. The reason we do that is particularly for companies is that we are required to account for all the movements of the company transactions, and we want to make sure that when the client says that's the balance of their account, it actually is. If we're using Xero bank feeds, this is a little easier because we know the data is coming straight through from Xero, but we would still, if we can, get a copy of the bank statement to support that closing balance, even though we know it's coming from Xero. If we don't have anything else, then we would simply maybe print out a copy of the Xero bank statement screen showing the 31st of March or the last banking day of 31st of March, or we'd keep a copy of the Xero bank reconciliation report, which would show the closing statement balance imported straight from the bank. I think the words are imported statement balance, so you'd know that it shows up. But if you're working from an MYOB source, or if you're not sure, it's always best to ask for the closing statement balance or the closing statement for the year, and we actually ask for that as a matter of course on all of our checklists. So for this particular instance we've got those 4 done. What we don't have is the closing bank statement for this account here. So what I've already done is, when I did my previous section, I made some notes for the client about some activity in some of the credit cards, and here I've already raised a question that this bank statement is outstanding. and so I've asked the client to confirm some details here and supply a copy of the 31/3/12 bank statement. What we should do along the side here of this particular item is just put something off the side, like I use OS for outstanding, just to flag for me that there is something missing from this particular page. Okay, so otherwise if I don't flag that, I could come back and look at it and I might forget that I'm still waiting for information. So it's a good practice that once you start a page, if you can't finish it right away, that you make it an identification that this is actually outstanding. And quite often what I'll do too is I'll change the tab name and put OS at the end as well, so that I know that this is outstanding. And important to remember later when you've cleared all your outstanding points to come back and take out the outstanding flag here, so that you know that you finished everything. Okay, so we've gone through and done that. We're now going to just check off our checklist here to make sure we've done everything. We have reviewed all our bank statement reconciliation reports, so put your initials in there. If there are any comments, you might make a brief comment here. There's not much room to provide a comment, so it's really only meant for minor points. If there are major points, you might feel free to actually create an entire note or insert rows into the schedule so that you can document your findings or document what's been done to support the particular account balance. In this case, there are no reconciling items, so we can sign off this item on our checklist. We have obtained bank statements and scanned them as supporting documents, and we have looked at the difference between in funds and overdraft. Now, one of the things we might want to look at here, depending on which operating system the accounting system is in, is whether or not it does in fact split out overdraft and in funds balances. Now you'll see here for this MYOB client, all the checking and savings accounts are in funds, and the one credit card is already listed as a liability. So in this case, there'd be nothing more to do. What we often find is if an account has an overdraft balance, it'll still show up in the assets section, and we might have to check whether or not we need to move it into the liabilities section. And that gets a little tricky to do, especially in Xero, so you'd have to talk to me about ways that we can achieve that. Some of the things we want to make sure of is that we are disclosing in the correct category, either current assets or current liabilities, the balances that are available. General rule of thumb for us here is that we are allowed to offset accounts within the same bank. So for example, if they have one account that's in overdraft but one that's in funds and the net balance is in funds, then we can leave that as a current asset. However, if they have accounts at two different banks and one is overdraft and one is in funds, even though the net amount might be in funds, we actually have to split them out because we can't offset balances between two third parties. So in that case, we would actually have to find a way to put the in funds balance as the asset and the overdraft balance or the credit card balance as a liability. If you do strike that scenario, we might need to record an extra session to cope with that, depending on which system they are using. In some cases, it's as simple as changing the reporting display for a particular account. Other times, we may end up having to create a dummy account or a dummy transaction, just so that we can move the balances around to another location. Okay, so that's pretty much the end of our bank section for now. What we would do if we had reconciling adjustments is we would want to just at least verify that those items are reasonable. We're not required to test and substantiate absolutely everything that's there, but we must be able to say what we've done and have a reasonableness test about it. So for example, if they had outstanding checks, one of the things that can happen with outstanding checks is they can get stale. In New Zealand, if you write a check, it's valid for 6 months. So if they've got outstanding checks that have actually been written but are now more than 6 months old, we might want to query that with the client and ask them, well, these checks are now stale, they can't be presented to the bank and cashed, therefore what is it we're going to do with this? Are we going to reverse them and record them as a liability, or are we going to do something else? Outstanding deposits, if the deposit has been outstanding for more than about 4 or 5 days, it's in fact more than 1 day, it's probably not an outstanding deposit. Technically, an outstanding deposit is where we've taken money to the bank, lodged it with the bank, but the bank hasn't processed it yet. Now, that may have been the case 20 years ago, where it might have taken a day for things to show up on a bank statement. In this day and age, that doesn't happen. Things show up the same day they're banked. So most of the time, outstanding deposits really reflect cash on hand that hasn't been banked. And in that case, we actually might want to adjust that so it shows up as cash on hand versus an outstanding deposit to the check account. And that's especially important if the bank account is in overdraft, but when you throw in the cash on hand, it goes in funds. And we are actually required to make sure that those accounts are in the right place. And at that date, the account was an overdraft, and it should actually be listed as an overdraft balance. So if you spot something like that, where you've got reconciling adjustments, especially outstanding deposits, that look like they are not what they seem to be, you'll want to get advice on how to handle that. The next column here is our journals, and in this column, if we were going to make an adjustment, we could put in our debits and credits or our pluses and minuses here to show how we have or how we plan to adjust for that. Once you've done all of that and you've identified that our classification is going to be okay, you can put your initials in here. Down the bottom of every page, you'll see these two little sign-off boxes. One says journals entered. In this case, we're not going to enter any journals, so that's not applicable. And the second is that we have reconciled it to the balance sheet. Now we can sign this off now because those totals actually do reconcile to the balance sheet. And that comes down to making sure that they all agree with what's on the balance sheet here. And as I've mentioned earlier, one of the strategies we have to make sure of is that for every item on the balance sheet, we've tied that back to one of our schedules. So in this particular case, we'll be looking at the bank balance. We have identified all the bank accounts that are on our balance sheet. We have summarized the reconciliation, statement balance plus or minus adjustments equals ledger balance, and we have sourced or verified the statement balance back to a third-party confirmation, which is usually simply a photocopy of a bank statement or even a screen printout from internet banking showing the balance at the end of our reporting period, which in this case is 31st of March 2012. Finally, we have split between in funds and overdraft, and we have checked to make sure that we are appropriately disclosing our balances on the balance sheet. If you have any questions on that, feel free to send me an email. As always, if you raise questions for the client, make sure you log them in your comments section, or your questions section, and you flag something as outstanding so that we know that this is not quite complete and ready for us to work on.